Welcome back to this video. In this video tutorial, I will practice some numerical questions for break-even point, margin of safety, and targeted profit. So let's start with break-even point practical question. You can see on your screen the data is given. Sale price per unit for a product is $90 and the variable cost is $40. And the contribution, as you are already familiar with the contribution formula, which is equal to selling price minus variable cost. So this will be your contribution. Selling price is $90 and variable cost is $40. So 90 minus 40 is giving you $50 contribution per unit. So $50 is already on your screen. So if the fixed cost for the company is $85,000, then what will be the break-even point in units as well as in dollar value? So let's calculate the break-even point in units. The formula is very simple. Fixed cost over contribution per unit. That is the formula for break-even point in units. So we have already contribution per unit calculated. Contribution per unit. Okay, if fixed cost is $85,000 and the contribution per unit is $50, just putting the values in the formula, it is giving you exactly 1700 units, 1700 units. It means exactly at 1700 units, we will be making no profit and no loss. If the examiner is asking you to calculate break-even point in dollar value, then you can multiply 1700 units and per unit selling price is $90 as you have been given the data. So 1700 times $90. So it is giving you $153,000. This is the break-even point in terms of dollar value. So we have calculated break-even point in units as well as in dollar value based on the given data. You can see. Okay, now my next question will be if the current level of sales is 2,500 units and the total value becomes $225,000, then what is the margin of safety? So basically margin of safety is the difference of our current sales value, current sales revenue minus break-even point. Okay, if it is calculated in units, then current sales are 2,500 units and break-even sales we just calculated, which is 1,700 units. So the difference of our current sales and the break-even sales are exactly 800 units. So this is our margin of safety. If our current level of sale is 2,500, then we have margin of safety of 800 units. What does it mean? Margin of safety means how much decline from our current sales is acceptable by the business. So from our current sales, if we start declining, then up to 800 units we can accept the decline from our current sales. This is margin of safety. And if margin of safety is required in terms of dollar value, then the formula will be same, but it will be in terms of dollar. So that is the current sales revenue minus break-even sales revenue. Okay, now our current sales revenue as it is given in the question, 225,000. So $225,000 minus break-even sales. You can go back to numerical question. We just calculated break-even point in terms of dollar and take this value 153,000. Okay, so put the value $153,000. Okay, take the difference of 225. I'm using my calculator, 225,000 minus 153,000. So in terms of dollars, This is giving you $72,000. This is our margin of safety in terms of dollar value. But in case examiner asks you to calculate margin of safety in percentage, then what will be the formula? The formula will be margin of safety over current sales level. In order to calculate in percentage, we can multiply this with 100. So our margin of safety is $72,000 and our current sales are $225,000, and you can multiply this with 100. So 72,000 divided by 225,000 times 100. This is giving you 32%. So from our current sales, we can decline up to 32%. That is margin of safety interpretation. Okay, now the last part of our video is targeted profit. You can see this question and the data is given to you. Racing bicycle company, the sales, current sales are 500 bicycles, and its variable cost for 500 bicycles are 153,000, and the contribution is 100,000, which is the difference of sales value and variable cost. And if we deduct fixed cost from our contribution, then we have net operating income. Okay, if the examiner asks you from this given data, if you target your profit should be 100,000 instead of this 20,000, your targeted profit is 100,000, then how many units you need to sold out in order to get profit, which is 100,000. This type of question we call this is target profit. So in order to calculate the targeted units, this is known as target profit analysis. And how many units we need to sell? We are calculating this with the help of this formula, which will be exactly similar to break-even point, but there is one addition. In break-even point, we write fixed cost over contribution per unit. Up till this, the formula is same, but you can add targeted profit in the fixed cost. Okay, and now the numerator becomes required contribution. Okay, required contribution over per unit contribution. Now the formula is straightforward. Now we can put the values in the formula. Now you can see from the given data, the fixed cost is $80,000. Okay, now here we go. 80,000 is our fixed cost and our targeted profit is 100,000. And per unit contribution, how can we calculate per unit contribution? You can see per unit selling price, 250,000 is the total sales value. 250,000 is the total sales value for how many bicycles? 500 bicycles. It means for 1 unit, the selling price is $500. Okay. Now, if you look at the variable cost, 150,000 is the variable cost for how many bicycles? 500 bicycles. It means for 1 bicycle, the variable cost is 300. So difference of 500 and 300 is 200. That is the contribution per bicycle. So we calculated contribution per unit, which is 300. Sorry, the per unit contribution is 200. Sorry. So per unit contribution, which we just calculated, is 200. Okay. Now 180,000 is our required contribution, and per unit contribution is 200. How many units we can sell in order to make 100,000 profit? So 180,000 over 200. So exactly we need to sell 900 units or 900 bicycles to make the profit exactly equal to our target, which is 100,000. So in this video, we got to know the margin of safety in practice, the different types of margin of safety, the break-even point, and the target profit analysis. I hope you enjoyed this video. Just subscribe this channel in order to have more such interesting videos on accountancy, finance, and business. Thank you very much.